Good morning, everyone. My name is Stewart. I'm the CEO of QC Copper and Gold, and I'm so pleased to be here today to update everybody on the Opemiska's initial maiden resource. We just announced it today. It's large, it's high grade, it's constrained in an open pit. It's 82% in the measured and indicated category, over 60% in the measured category. The average grade is 4 times the cutoff grade. This is robust, this is large. It's the first time this resource has been defined in terms of an open pit. The Opemiska was a legendary mine, and it is now indeed reborn as a very large open pit. And we think this is going to redefine the Chibougamau district as a whole. So we're very excited. The resource itself is nearly 2 billion pounds of copper in the middle of Quebec with the rail in place, highway there. It's a really fantastic opportunity. And when I explain to you the value growth, where we are today, we're a $20 million market cap. As of Friday, I think on Monday, things are going to start to change. So here is the forward-looking statement. Please have a look. Here's our corporate overview. As I said, I think a lot of this information here is now irrelevant. What I'll point out is our market cap closed on Friday before we announced this resource was $20 million. We've got about $3 million in cash and about $14 million worth of baseload shares, a uranium company led by James Sykes. Strip that out, we're getting $3 million for the Opemiska, which is now nearly 2 billion pounds at nearly 1% copper equivalent in the middle of Quebec, pit constrained. As well, we've got a Roger project, which we don't talk about much, but it is a 500,000 ounces at a gram, 15 kilometers away from the Opemiska. It's a satellite deposit. So I think things are going to change. People are going to find out who QC Copper and Gold. There were very few who knew about us, but some smart people did and saw what we have, and now we can define it. And that's what it's been all about. It's been redefining it. We've never been able to talk about it because it's never had a 43-101, but today we do. And this is what it looks like. Global envelope, 104 million tons in all 3 categories at nearly 0.9% copper. Substantial. I think of things in terms of pounds. It's just easier that way because that's mostly how copper is quoted. Right now, a pound of copper is about $4.30. Well, we've got here all 3 categories, 1.926 billion pounds of copper. Do the math on a per pound basis. That's $8.3 billion US gross metal value. Again, 82% of that's in M&I category, which means it's high confidence. It's also pit constrained, meaning everything we're talking about, every pound we discuss today is within a pit, okay? So anything outside of that pit is not being considered, but that doesn't mean we're not going to consider it. That's low-hanging fruit, and I'm going to show you that we're going to be expanding these pits in the near term. So again, I emphasize high confidence, pit constrained, and the average grade is 4 times the cutoff grade, which is 0.2. Our average grade is over 0.8. That's phenomenal. If you economic operations are considered twice the cutoff grade, we're 4 times. That's excellent. And again, I emphasize this is just the beginning. I'm going to show you what our geologic model looks like. I'm going to show you what these 2 billion pounds constrained in a pit looks like, and I'm going to show you resources outside of those pits or this pit, which we're going to capture in the near term with our drill programs, which are currently being designed as we speak. A lot of people don't understand copper, so just very quickly, we're nearly 1% copper or just under 0.9% copper equivalent. What does that mean? Most people understand and follow gold. What is an ounce of gold? And an open pit deposit, really the de facto standard is a 1 gram per ton in an open pit. That's what Malarctic is. That's what Detour is. That's what Cote Lake is. Well, if you have 1% copper, in fact, it's 71% more valuable than 1 gram per ton gold. Our gold equivalent average grade in this resource is about 1.4, 1.5 grams gold. So even though we're a copper deposit, and I'm just doing this so people can relate to how valuable a ton of rock at 1% copper is relative to what most people are familiar with. So this is a very high grade resource, high confidence, high grade relative to typical gold deposits. And again, I also think about gross metal value. That's something that I emphasize there. 8.3 billion US dollars. That's over $10 billion, nearly $11 billion in Canadian dollars. Gross metal in the ground, pit constrained. If you do the math on a gold basis at spot price, that's about 4.75 million ounces of gold. On an apples to apples basis with this copper. Again, we're a copper deposit, but people understand gold. So we're sizable. And what does that mean? Who are our comps? Well, in the copper space, certainly in Canada, North America, I don't see anybody. I really don't see anybody who has this scale, this confidence, this grade of a resource, especially out of the gate, and especially one that has potential to grow well beyond this 100 million ton resource. Are there gold resources? Sure, there are. Find a 5 million ounce, 1.5% gold resource out there and look at their market cap. They are well into the hundreds of millions of dollars, well into the $100 million. That's where we're going with QC Copper. It's not going to happen today, but we're going to get there because that's what the value is. I'm convinced this is a mine, a very valuable asset, and we're just getting started. This is where we are in Chibougamau. So to define what we're talking about in this resource, it's the former Springer and the Perry high-grade underground mines. We've redefined them into a single open pit. It's a disseminated resource. This is where all of our resources are. However, the Opemiska, when it was operated by Falconbridge for 50 years, also had the Robotai as a third mine and a fourth mine called the Cook. We haven't drilled those yet. There are resources that we're going to grow, and it's going to make our resource even bigger down the road. And then we have the Roger deposit, which we acquired about 6 months ago. This is about 15 kilometers on the rail, and emphasize we got rail running CN right through our property. This is a satellite deposit, about 17 million tons at a gram gold there. It's a very valuable asset. Again, we get zero value for it, but that's going to change. We got zero value for the Opemiska as well, but it's a new day. This is what it looks like. Again, pit constrained. So everything you see inside these shaded areas here, that's the resource we're referring to. Everything you see outside of it, we're not even talking about it yet, but we know it's there. We have a huge database from Falconbridge and other drilling. So these resources here didn't make the pit just yet, but it's well mineralized, and I'll show you where the grade distribution comes from. We did pull down the saddle zone. So originally, before we started this drill campaign, these were two separate pits, but we drilled in here. We've dropped this pit. Now it's a big super pit, but it's going to get bigger with future drilling. It's also going to get bigger towards the east of the Perry. We call these the eastern veins. We did some step out drilling here, very little drilling out here historically. So we drilled here, clearly hit some mineralization. There's mineralization at depth. So this is future. This is growth. All this stuff here is growth. All this stuff right here is the 104 million tons at 0.85% copper equivalent today. So this is robust today, but we see lots of growth down the future. This is the breakdown of measured and indicated here versus inferred. So very high confidence over here, very high confidence, especially during the earlier stage mineralization, which is near surface, particularly in the crown pillar, which I'll get to. So there's going to be some starter pit scenarios which are going to increase our confidence or our payback as higher grade in the earlier days. But it's very to come out of the gate with 82% in the measured and indicated category is substantial. This is not an inferred resource, and why that's so important, aside from just having confidence, is that M&I goes into a pre-feasibility study. So that's critically important. So we can fast track this project. We've always said we believe this can be developed this cycle, and I think this certainly helps that case. It's the grade distribution. I'll let everybody take a look at it. I won't go through in detail, but again, I'll note here, there's a whole lot of mineralization, good grades that we believe can be kept and brought into this pit, whether this is expanding this the saddle zone area and also the eastern veins. There are reserves here that were Falconbridge reserves, proven and probable category, but pre-43-101. So there is plenty of upside down the road later this year and 2022 in our drill programs to follow. Talked about the starter pits. This project benefited from what's called crown pillars, which are ceilings of underground mines. They're thick. This mineralization runs right to surface. And so we have defined within this resource almost 11 million tons at an average grade of 1.2. And that's going to be the first 3 years of the mine operation. Very high grade, Why is that important? Well, this money comes early, and early money gets your payback better. It gets your increases your NPV, it increases your IRR because of the time value of money. If this high grade was lower, it would be less interesting. But because the high grade veins are still there from the crown pillars on both the Springer and the Perry mines, you can see right here the shallow. It's going to greatly increase the economics. We haven't defined the economics yet. We will get there, but we see very clearly in the geology where the high grade zones are, and we modeled this, so it's looking good. Beyond the resource expansion, I've talked mostly about this, but again, everything we've talked about is on the Springer and the Perry here in this area. We have not focused on the Robitaille or the Cook, nor have we focused on the Roger. But the low-hanging fruit certainly is going to be in and around the open pit. We're going to make that open pit bigger, and then we're going to go after mines 3 and 4, and then, of course, the Roger project. So we have substantial upside. We are just getting started, and there's going to be plenty of drilling ahead of us. Very quickly, this is what the Roger looked like. Again, it is pit constrained. It's about 15 kilometers to the west. It's about 17 million tons. So when you add the 104 million tons plus 17 million tons, we're north of 120 million tons in Chibougamau, pit constrained. So again, it's, the quality of pit constrained versus unconstrained is very important here. So these are high quality ounces, high quality pounds, and it just adds value where we got none prior to these reports. Of course, I would be remiss if I didn't emphasize where we are. We are in the town of Chibougamau, which is a world-class historic district. It stopped producing in the late 80s, early 90s. We believe it's going to have a rebirth, and it's going to be led, the charge is going to be led by QC Copper and the Opemiska project. It produced 1.1 billion pounds, nearly 1 million ounces in its former life. What it left us is excellent infrastructure, power railroad, on-site community that understands and appreciates mining, First Nation support. There's no better place to be. And the Quebec government is phenomenal in terms of supporting mining infrastructure vis-a-vis the Plan Nord, flow-through incentives. There is no better place to build a mine than in Quebec. And we've got what we believe is a mine in Quebec. And very few copper comparables come close to the resource size, the grade, and of course, where it is. So what are we going to do in the coming days, weeks, months, years? We need to tell our story. We just came out with a resource report. I think it's going to take a lot of people by surprise. Hopefully it takes the market by storm. My job is going to be to get out there and tell our story as frequently as possible and explain to people what we have and the value upside there. From there, we're going to expand the resource. We know what we have today. We've showed very clearly through our models and earlier in this presentation where the upside is. It's well defined. We know it's there. We just have to define it in the 43-101 system, and we'll do that. And then we'll evaluate all sorts of other expansion outside of the pit. We're going to go drill Cook, Robitaille, and of course, the Roger. There's all sorts of opportunity. We're going to get our currency up. And honestly, the sky's the limit. We think this has the potential to be multiple hundreds of millions of dollars. And if copper continues to reach the limits which all of the experts proclaim, including its demand for the electrical revolution and green energy metals, who knows where we go? All we know is that we have a really substantial resource with high confidence, good grade, and a great jurisdiction. My name is Stewart. I thank you for your time. If anybody has any questions, I'm always available. We're listed under the Toronto Venture Exchange under the symbol QCCU. And this is our model, and you can expect this to grow in 2022. But for now, we're very excited to announce this nearly 2 billion pounds resource. So thank you for your time.